Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today on Mako Mining, traded on the TSX.V under the ticker MKO and on the OTCQX under the ticker MAKOF. And we're joined today with the president and CEO of Mako Mining, Akiba Leisman. And Akiba, great to have you back on the show to get an update on Mako. I want to kick things off just with a quick snapshot operationally of how things went in Q3. We haven't talked since you put those out on October the 22nd, but we will put a link down below to the company news section so you can go over and follow along with us. But it looked like a pretty good quarter. I'll let you kind of give us the key takeaway metrics and the key highlights from the quarter, but give us a snapshot of how things are going at both San Albino Mine and Las Conchitas, where you're mining.
Thanks, Chad, for having me on again. I would consider our Q3 to be weak, but there are reasons for it being weak that really need to be looked at in context of what we were doing over at Las Conchitas from Q4 of last year, really through Q2. So as your listeners who've been listening to the story for a while know that we made a decision at the end of 2022 to bifurcate the permitting approach over at Las Conchitas. So initially getting a variety of small areas over at Las Conchitas permitted with a bulk sample, which arrived that permit in towards the end of Q2 2023. And then we were mining and processing Las Conchitas material through that bulk sample continuously through Q2 of 2024. Now, the second part of that permitting approach is that we were going to go back, acquire all the surface rights with the cash flow that we were getting from Las Conchitas, which amounted to, in aggregate, inclusive of the surface rights that we needed for the bulk sample, probably about US $5.5 million. And then in aggregate for that second tranche, it would have been about 3.8 million of that total. So we went and got all those surface rights and applied for the full EIA towards the end of 2023, with the initial expectations actually that the permit would come at the end of 2023, but that it really required a lot of threading the needle for that to happen. But from a realistic expectation, sometime in the early part of 2024. That permit didn't come until July, so well within Q2, and it started to matter on how we were managing our mine plan really starting in April. So we actually had blowout numbers in Q2 where we wound up selling 12,300 ounces of gold. But a lot of the reason why we had such high numbers, because really this is a mine that on average should be doing just over 10,000 ounces a quarter at our current run rates. But the reason why we wound up selling so much gold in Q2 was because we were restricted on some of the areas that we were mining. We really should have been doing a lot of the pre-development work for the outside of bulk sample areas for Las Conchitas in Q1 and in Q2. And then we finally got the permit in the first week of Q3. We needed to haul ass and really get ahead of, or I guess back on track with our pre-development program, where we had to do a lot of pre-strip to access the high-grade ore over at Las Conchitas, which happened towards the end of September. So right around September 15th, we started to be in relatively high-grade ore, but it did limit what was going through the mill throughout the quarter. So we only wound up selling 6,500 ounces of gold for the quarter in Q3. And really starting towards the end of September, everything is back on track. So the head grade of Q3 went down from a low 8 gram a ton level. And because we didn't have access to that high grade material, Q3 was back down to 4.5 grams. And then Q4, really starting since the end of September, we're well in excess of 7.5 grams, kind of like right back to the normal head grades for the plant. So from your listeners' perspective, there's a couple of things that will happen when we announce our Q3 financials, is that nothing really slowed down operationally. It was just we needed to do two things. One, we were limited on a lot of the areas of high grade, so we had effectively a lower head grade going into the plant. We processed a lot more of our lower grade stockpile along with it, but it wasn't like mining operations were slowing down. So effectively, from a dollar perspective, it was actually a very similar operating cost environment between Q3 versus Q2. And the net effect of that is just simple arithmetic, is that if you wind up having a normalized run rate for our operations of just over 10,000 ounces a quarter, and you wind up only selling 6,500 ounces because you didn't have access to the high grade, and you basically have the same dollar amount operating costs, it effectively means your all-in sustaining costs are going to go up by a factor of about 50%, just simple arithmetic. And then on top of that, what we put in that press release for the operating results, we needed to do a lot of that catch-up work on the pre-developments. There was about 1.3 million tons, just under 1.3 million tons of pre-strip that needed to be moved in order to access that high-grade material that we started to access towards the end of September. And our unit costs are approximately $3 a ton of moving. So for any of your listeners that are good with math, 1.3 million times 3 is 3.9 million. And 3.9 million divided by the 6,500 ounces that we sold is effectively $600 an ounce, which is part of the World Gold Council calculations for AISC, is also going to be additive to the AISC number over there. So Q3 is going to have a very high AISC. It was still a profitable quarter. We still made cash and we still generated net income for the quarter, but it was definitely a quarter of catch up. Q4, it's back to normal. The mine is now processing high 7 grams a ton material. A lot of that pre-strip is behind us. So you're going to see our overall cost of the operation kind of go right back down to the low 1,000s areas, just like they have been for the preceding 3 quarters. So Q3 was definitely on the weaker side, but it had nothing to do purely operationally. It was simply in terms of access and where we were mining prior to us getting that permit, which we got in the first week of Q3. And then all of Q3 was just catching up for all of the stuff that we were behind, a lot of the areas that we should have been mining between January and June of this year.
Well, and can you just give us a rough idea for Q4? Where do you think the mined ounces will come in? Where do you think the grade will be now that you're into that higher grade area? And just remind people that you're blending ore from a couple different sources to get that head grade. So, do you have a rough idea of where it's going to come in?
Yeah, so when I talk about head grades, that includes the post-blended rates. So the thing about our mine is that there's very little grade variability when you're in the veins. The veins themselves, geostatistically speaking, wind up grading around 17 grams a ton on these fairly narrow vein structures. So roughly, let's call it 90 centimeters on average. And then on either side of that vein, there's a mineralized hanging wall and footwall that tends to grade anywhere from a 0.5 gram to 3 gram material. And the way that we control dilution, which is really better than just about, actually, I would say any mining company on the planet. I really don't think there's an open pit miner that mines as selectively as we do. And there are reasons for why we do that. But when you include that dilution that comes from either side of the vein, the average diluted vein that we pull out of the mine is roughly 13 grams. And it's that 13 grams that then gets blended with our stockpile, which is effectively right now in the 2 to 2.5 gram range. So in Q3, when we had a 4.5 gram head grade, that just meant we were putting into the mill a lot more of that low grade stockpile versus that 13 gram diluted vein material. And then normally it's you really kind of want to run that at around a 50-50 amount. And that was the case in Q4, and that was the case in Q4 last year, Q1 this year, Q2 this year as well. So roughly 50-50 plus or minus. And then the blended head grades, if you will, are running now in excess of 7.5 grams for the quarter. And so for your listeners on a back of the envelope type calculation, when you're dealing with throughputs of the mill that we've been pretty continuously milling at, which is just under, let's say, 600 tons a day, or about 20% above nameplate capacity, when you're dealing with 7.5 grams, that kind of means you're going to wind up recovering just over 10,000 ounces of gold. In Q2, when we had the abnormally high head grade, which was well into the 8s, we wound up selling 12,300 and recovering just under that amount for the quarter. So when you're back to normal, and I consider 7.5 grams to be on that blended basis to be normal, you're dealing with a mine that will be producing just over 10,000 ounces a quarter. When you're going from low grade to high grade, you tend to build up inventory. So I would expect sales to be slightly below the amount of ounces that we recover for this year. That's just normal for any plant when you go from low grade to high grade. But in terms of recovered gold ounces, you're looking at something that will, assuming the 7.5 gram rate, assuming our throughput rate, assuming our recovery rates, you're looking at something that will be just over 10,000 ounces.
All right, appreciate you breaking that down. And yeah, it's interesting how high grade the vein material is. There's a little bit of that diluted vein material, and then you blend it with the stockpiles. It looks like you still have a healthy stockpile. It said you have 135,496 tons of stockpile still there at the end of the quarter. So we'll keep looking to see how that grade profile pops back up for Q4 and also some of the run rate there. But also, let's talk about some of the exploration that the team is doing on the ground. We'll maybe break it into two parts, Akiba. Near mine, something like, and I would consider Las Conchitas, still to be mined material right now, and anything near San Albino Mine. But then also some regional targets the team has been working on. Maybe give us a close to the mine and then a further afield exploration update.
Sure. So we have four RC rigs on site right now, and then one core rig that's primarily there to do the geotechnical work for our underground program. We should have a fifth RC rig on site mañana, which is what I've been told every day for the last few weeks on when that fifth RC rig is going to be coming. So if you break down those four RC rigs that we have right now, one of them is basically given to our mining operations to do infill work. So they're operating in the area that we're going to be mining, let's say, over the course of the next 3 to 12 months from now. So tightening up our mine plan and things of the sort. So it's actually a really good system to have that in place, where we're getting a lot more comfortable with being able to delineate resources with, from our perspective, relatively wide-spaced RC drill results, and then we'll come back in. And then once we actually have like a good handle on structure, it actually works really well. It's like we actually have a very good handle on being able to quantify intermediate and long-term mine plans with much lower drilling density than we did when we first took over this project in 2019. The other three RC rigs, two of them are focused on extensional work over at Las Conchitas, both in Las Conchitas Central, which was the most sporadic amount of drilling that we had when we published that updated resource in October of last year, November of last year. And then we have another rig, which really for the first time ever is doing systematic exploration from a regional perspective. And the way that I define regional is that the San Albino, Las Conchitas, the historic El Golfo mine, if you look at some of our maps and our presentation, are bounded by two reasonable sized rivers. To the north, it's the El Jico River. To the south, the Susaquian River. And the rivers are not there by accident. I mean, the rivers are rivers because there are like pretty major structures going through here. So the mineralization that you see on either side of that river could be very, very different than what you have in that regional area. So we did a little bit of a wildcat core drilling program at the end of 2022, about 20 kilometers to the north of the mine, which was the only drilling that's ever been done outside of those bounded rivers. But I wouldn't consider that to be systematic. So we took one of those RC rigs and started drilling to the south of the historic El Golfo mine, an area called El Golfo Sur. And then the results over there, we actually found some grade right by some reasonably current artisanal workings over there. But it was clear that it was going to be a lot more work for us to develop like mineable resources. So we moved that rig, which is actually more important from my perspective. And the reason why this didn't start first was just for access reasons. And this is really the first time that we're actually drilling on the north side of that El Jico River over at the Puerto Rios concession, this Puerto Rios concession that we acquired at the end of 2019 from another company, which really kind of completed our jigsaw puzzle of concessions. And what we're going to be doing with that rig, we put out some regional prospecting results in 2021 and 2022 in this area, which basically shows pretty continuous strike potential in excess of 9 kilometers in this area. bounded by this river, going over the Murrah River about 6 kilometers to the northeast, and then even further that to the end of our concessions. So the way that we're going to be attacking that is that we're going to be taking that RC rig, doing fairly wide space drilling, trying to see what's there over at the southwest part of this regional strike potential, and then move all the way to the northeast, many kilometers away from the mine, maybe even as much as 8 kilometers away from the mine. And then we're going to basically find stuff in between over the course of years. So I think this one rig that we have over here, it's actually one of the reasons why we need a fifth RC rig as well, and potentially even a sixth later in the year, just to do everything that we need to do, is going to be busy for many years to come to try to block out additional open pit mines within this 9 kilometers of strike from a regional potential perspective. I mean, don't lose sight of the fact that we have 5 pits, 6 pits actually. But if you actually add up all of the strike that we have on each one of these areas, they really only amount to maybe about 500 or 600 meters in aggregate when you're talking about strike potential of what we've been mining to date. And now you're talking about really going after regional targets that have 9 kilometers of strike potential. And even that is within our overall land package, where if you go all the way from the southwest to our concession boundaries, all the way to the northeast of our concession boundaries, there's 28 kilometers of strike potential. So you really are dealing with things 2, 3, potentially even 4 orders of magnitude if you start adding up multiple dimensions over here of potential differences on what is on the overall property versus what has been tested and mined to date.
Well, I'm going to attach a map that shows a lot of these regional targets to give people a frame of reference of, where the mine is and where some of the concessions are that you're drilling closer to it, but still regionally, and then some of the concessions you just mentioned that you've been drilling even further afield. But it's a big land package, a lot of opportunity, a lot of exploration upside for Mako, funded by organic growth with the production from the mining activities. But let's also switch over to, mine number 2 waiting in the wings and look at the Eagle Mountain Gold Project in Guyana. Can you give us just a quick update on the development and de-risking process there?
Sure. So there's 3 big things that we need to do before we can make our construction decision. The first we view is relatively pro forma. It should be non-controversial with the government, is that's to have a mineral agreement in place. They are pretty much off the shelf mineral agreements that lay out the economics to the government, to you, which is pretty well established, both in terms of law and precedent. And then any ongoing obligations that you need, whether it's support for the community, things along those lines, expectations for how much work that you need to do, expectations for employment and things of the sort. So we don't think there's going to be like a huge amount of risk for our schedule to get that fully agreed to, probably sometime in Q2 of next year. I think that's kind of like a reasonable target. Steve Parsons, the former CEO of Gold Source and our current president, is down in Guyana right now with the government, kind of again going over our scheduled expectations on that front. And the other 2 things which I view as bigger deals, which is the application for our large-scale mining license. So we had our prospecting license recently renewed. I guess that was formally renewed a little over a month ago, and then we got it informally renewed maybe about 3 months ago. So that prospecting license needs to be changed to a large-scale mining license. And then that application will be submitted roughly the same time that our EIA will be submitted, which we're aiming to do probably on the back end of Q3 of next year. So right now we have our company-owned drill rig on site doing a lot of the hydrological and some of the geotechnical work that we need to do, which is really there to finalize the big engineering decisions that we need on how the waste storage, the tailing storage, even to a certain extent the scoping of the plant design over here is gonna be established, and we think we can get that work done in parallel to completing a lot of the things that we need to do to get our EIA together. So our target for the submission of those two things will be roughly the same time and both roughly towards the end of Q3 of next year. And then it's a question about whether the government obviously grants us the changeover to the large scale mining license, which Guyana is an extremely mining friendly jurisdiction. The government wants us to be mining, so they're very happy that we're going to be upgrading from our PL to our large scale mining license. And then our EIA, and then the EIA, even with the experience of Nicaragua. Nicaragua is an extremely mining friendly jurisdiction, but obviously even with that, on a couple of go rounds, it occurred 2 or 3 months. In the case of our actual EIA, 4 months behind schedule. There's always kind of like risk from a timing perspective when you're dealing with EIA submissions in any government, no matter how mining friendly they are. But we do think that it's realistic to expect that to be approved within a 6 month timeframe. And then if you look at your calendars at the end of Q3 plus 6 months, that kind of puts you towards the end of let's call it the middle of Q2 of 2026 to have this thing fully permitted and ready for construction. And then we do think with that schedule, we can wind up having first gold pour in the first quarter of 2027.
All right. Well, I appreciate you breaking down kind of the anticipated timelines. I know it's a moving target with some of the permitting, but it gives people a sense of what the process is in Guyana at the Eagle Mountain Gold Project. And I guess let's just wrap up, Akiba, with any key catalyst you want investors focused in on as we round out the year and as we maybe head into the first half of next year.
Sure. So I mentioned at speaking at a conference over in Switzerland, and I basically told everybody I haven't seen this many opportunities to do M&A since my career started in 2006, like accretive M&A. Like there's always kind of like opportunities to do things, obviously at the bottom of the cycle, but that's kind of an anticipation of things improving, or at the top of the cycle where everybody is kind of like super excited, but prices are really high. This is actually one of those fundamental environments where there's such a disconnect between the underlying economics and fundamentals of some of these mining companies, especially on the smaller end of the spectrum, that I shake my head at some of the opportunities that are coming across our desk right now. And I think we're close to doing something. I mean, so even a little bit of a slight anecdote on this is that we normally file our Q3 financials, let's call it between the second and third week of the month, which is kind of where we are right now. So ordinarily we file our financials like around today for Q3. I've pushed that back a little bit towards the end of the quarter because I think we might actually be close to pulling the trigger on something. I think there's a greater than 50% probability that's going to be a December event, but I'm pretty confident that we're going to be able to announce an actual transaction in 2024. And if not, then I think there's a high degree of probability that it will happen in early 2025. So there's a lot of things coming across our desk in terms of where we're looking at regionally. I think there was a huge geopolitical improvement in the United States, for instance. So our DNA as a company is American. I'm American. I'm giving this talk right now from the United States. The headquarters of our operating team are in Tucson, Arizona, of all places. So we do have kind of a presence in the States. And it is 180 degrees in terms of how to move forward with mining projects and even mines in the United States today versus what it looked like even a month ago. So there's definitely a lot of things, and it's not just the U.S. that we're looking at. We're looking at many jurisdictions, all of which are mining friendly. That's kind of a key attribute for jurisdictions that we're going to be looking at. But this is really the first time that we have the ability to kind of roll up our sleeves, put on our gloves, and do what we do best, which is kind of like manage actual operations within jurisdictions where we have a presence.
Well, that's pretty exciting, Akiba. So I think a lot of people listening in will be excited to hear that M&A is on the menu, and we'll keep looking out for, I guess, the financials, but also whether those include a deal or not, or if that gets pushed into, the first quarter of next year. But definitely something we'll keep on the horizon, as well as all the operational work going on in Nicaragua, but also the development work and de-risking going on in Guyana. So a lot going on with Mako Mining. And if people listening in want to follow along with all the news, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section, so you too can follow along. Akiba, keep us posted. We'll get you back on for an update. And as always, looking forward to our next conversation.
All right. Thanks, Chad. Appreciate it.